Let's go ahead and talk about it. Let me pull up my slides. I don't think we'll take very long on this today, just because I feel like stop losses are pretty straightforward. But of course, if you have any questions around it, please let me know. I'll be happy to answer it. And then afterwards, if we still have time, we can definitely go and talk about whatever you guys want to in regards to the market, or something here at Simpler Trading you might have a question about, and I would be more than happy to address that too. So using stop losses. Using stop losses can be a great way to help preserve and protect capital on a trade. In this video, we're going to talk about the different ways you can consider putting on a stop loss for both stocks and options, right? You can do it for stocks if you're in shares, and you can also do it for option trades as well. Typically, when I think of stop losses for options, it's usually based off a long call or long put, more as a momentum style trade. That's just personally. So the first way you may consider using stop losses is to manage capital when you might have a trade on it that is well over your normal risk tolerance on the trade, right? So the reason for entering the trade could be because you are in the shares themselves, right? So if I wanted to jump in Amazon shares, for example, or even Netflix shares in some of my smaller accounts, that would probably be well over my normal capital risk. So instead of risking that full amount of capital, even though I do want to be in shares, I might put in a stop loss. It could also be because I might be in an option trade where I really like the delta, or maybe it's a leap where I really want it to go further out in time to give the trade time to work out. But once again, I don't plan to actually risk the full capital amount. So by putting in a stop loss, whether it's for the shares or for an option trade, at the level I would personally consider, and this is different for everybody, but I would personally put the stop loss in at the place where I would consider it as my full loss, right? So what I'm completely willing to lose 100% of that trade on, that is where my stop loss goes. And we can talk about this as an example here in a second. But this way, if I put it on at where it's a full loss for myself, not a full loss on the actual trade itself, it will help protect that remaining capital out there. So in the trading plan that you might have for that trade, right, you're jumping into it. Let's say I wanted to get into shares of Netflix before earnings. I liked it to the upside. I like that monthly squeeze, but it doesn't quite make sense for my smaller account, but I still want to be in the shares. So for that, of course, I might consider a smaller amount of shares, but so I don't lose the full capital amount out there, I might set a stop loss on Netflix, for example, at $300. If it moves below 300, I don't want to be in Netflix anymore. I'll need to reevaluate it, so it will cancel out of all my shares, right? It will settle them out at that level, and then the rest of that capital will be brought back into my account. And I just had a trade fill. Okay. I like taking profits in the background. Always a good feeling. So that's what I would consider doing on a stop loss if you might have too much capital. If the share price or the option price, kind of what we just talked about now, moves down to your stop loss and reaches it, or moves below it, right? If it's all of a sudden move, it will trigger the trade to close out, right? So it will close out and you'll get that remaining capital back into your account. The other way you can consider using a stop loss is for a trade that actually already holds a profit. So the trade could be in a wonderful trend, right? Everything looks great. Everything looks good to continue higher. And I want to keep playing it to the upside. I still want to be in the trade that I'm actually in, but maybe I only hold one contract of the trade, right? So I can't leg out of it or something like that. And because, maybe I only hold one contract left, but I still want to keep that delta in strike and expiration to where I don't want to close it out and try and jump into a new one, I can put on a stop loss so that way I don't risk the profits that are already in the account. So putting in a stop loss could allow me to protect not only the capital risk, but also a part of the profits that are appearing for the trade, right? So for example, on my work trade is what just closed out for me to take a profit. But let's say I'm in work now. let's move this over really quick. We're right at a resistance level, but let's say we started to break above it, or it was a great trend and everything was looking good to continue up. And so I'm in an options trade. I got in it for $2. It's at $5. It's looking good. Signals are still valid with plenty of room to the upside. We're breaking above this level. Bollinger Bands, of course, ideally would be flaring open like they are back here. So I want to keep playing it to the upside. However, if all of a sudden we get a sell-off, right? Or if we go back in the middle of the day and turn this back into resistance and we go back down into consolidation, I don't want to lose the profits I already have. So I might consider putting in a stop loss then at that level around $4, right? It gives up $1 of my profit because the mark would currently be at 5, for example. However, it still protects $2 of profit, and it still protects my overall capital risk on the initial trade itself. That way, if it continues higher, I can look at it later in the day, or maybe set my stop loss just as a day order and then reevaluate it the next day to see where it's at and put in a new stop loss order for that day. Or, if it does come back down, I don't have to worry about it because I know either way, I'll be walking away with a profit on that trade, right? So once again, if the price moves down to or below my stop loss, that's when the order would trigger to fill. So it shouldn't trigger before, right? If it's at $7, it shouldn't trigger for 4 and fill there. But if it moved down and the price moved against me, then I could consider taking that off the table. So that is basically a stop loss. Let me just pull up Thinkorswim here, and I'll move this over. So here's RGEN. Let's just go ahead and set this up as if it was our trade. I know that's not what's on the work chain here, so let me change that. So let's say RGEN, right? This is a bullish trade that we're in. We like the trend to the upside. And let's say, this morning it was popping around quite a bit. But let's say it has an overall profit on the trade, and we want to continue to protect that profit. So we would go in here, and let's say this is a closing order, guys, just so you know. We would go in here, we would put a stop. On the option portion, I would put it off the mark personally, right? You can change where it's at, but I would put it off the mark. And I would change this to, let's say the price was at, $5. Maybe I set this at $3 as a stop. That would still allow for a profit based off our 180 cost basis, but it allows it to continue to play with the trend higher, especially when we have time on it out in the May monthly expiration. Or let's say we're concerned RGEN might go against our trade, right? Right now it's kind of hanging out around break even. And so maybe for you got into too many contracts or something like this, or you're just concerned, right? You don't want to risk the full $1.80. So maybe for your account, you set this at $1, right? So now it becomes a stop loss in the sense that you're protecting $1 capital on this option strike. If it were the shares themselves, right, then you would do it off of the underlying price. And if that's the case, definitely I'd be going off of a level off my chart personally to set that stop loss. So for RGEN, based off of the daily time frame, if I were in shares, let's say at $100 and things are looking good, but I don't want to risk the full $100 on 100 shares of capital. So what I do is I look for a level where I say, okay, if it breaks this, we're probably not remaining in a bullish trend. It's turning against us, and I want to be out of my shares. So for myself, I'd probably put it around $80. And of course, I would need to make sure that makes sense with my normal capital risk on the trade. But then I would go over here to Thinkorswim, and I would set this to a stop, right? So you got to change your order type to a stop. And then I would change this down to $80, right? And this is, of course, closing out of the shares. This way, if the price continues higher, great, we're good to go. I can always adjust this to make it to a stop loss to where I protect profits too when it gets there, or gets, higher up there. But if it starts to turn immediately against me, Now I've protected at least $80 of capital, um, you know, for the 100 shares out here, and I can recycle that back into my account if we really start to break that support level. So as I mentioned earlier, I personally don't use stop losses that much. I just like risking the full capital risk. But in regards to shares, or in regards to maybe something like a leap, right? Let's say we went further out in time to November on RGEN and I got in the money. Let's change this to open interest. I'm just curious. Yeah, not much open interest here, but let's say I got into the 100 call out here and I'm in it for $19. Well, I probably wouldn't want to risk that full $19 in this account. So what I would do is I would have this as my closing order, of course. I would set this to a stop and I would set this maybe down to $10, right? I'd risk half the capital in it. So that way I'm in a trade that has plenty of time. It still has a good delta. Let's check what this delta is. There we go, Greeks. So it's not the 0.7 delta I typically look for, but it's an in the money delta, so I'd like that. And then, of course, if it does move against me, well, I'm protecting and only risking really $10 of the capital here. And I don't typically use trailing stop losses, Geraldine. The only time I've ever done the few stops that I've done have just been a standard stop loss order, personally. And like I mentioned, I typically don't do that. I try and risk the total capital. That way I can really allow the trade to work. Because as I mentioned for myself, at least in my experience using stop losses, what I've found is, one, it felt like the market would go down right to that level to where the order would trigger and it would bring back my capital and I'd end up with the loss. And then it would immediately start to reverse and go back in my favor. So from that experience, I like to let it go. But the other reason why is, for my personality type, I really like to go more off the technicals on my chart. And so personally, I like to look at levels of support and resistance. And when the underlying price starts to break that, that's typically my sign that, okay, I'm looking for the RGEN, for example, to hold the 130. If we really start to reverse and break that level, this is now starting to go against my trend and my trade idea around this. So I'm closing out and protecting the remaining capital in there. So instead of having a stop loss, which might get triggered up here by the 10 period simple, I'm doing it based off the level and just managing it like that. Phil, I'm not exactly sure if a stop loss can be seen to where a stock can be manipulated. I don't know if we would have to worry about that necessarily, unless you're, a billionaire out there with a lot of shares. But there are definitely orders where, obviously you can see open interest and stuff, but I'd be curious about that. I haven't really looked into that to see if people have certain stops at levels to where other people can view the order and try and manipulate it to where they get canceled out and then it goes the opposite. It kind of felt like that on my stops though, but I know nobody's watching it because I had like barely any contracts out there to really require somebody to to try and mess with me like that. So, and yeah, Lee, especially in this volatile market, or it's becoming a little less volatile maybe. Let's go to SPX really quick. But yeah, for myself, stop losses are never a bad idea, but especially when we were trading back here, it would have been so easy to get whipsawed out of your trade. So for my personal trading plan, what I found over the years is just risk the capital overall. But like I said, and from the examples that we showed, sometimes a stop loss can still make sense for your trading account, especially if you want it to be in something like, for example, Netflix, right? Which is just it's just continuing. This is a beautiful run into earnings, guys. But on the monthly time frame, right? We knew we had this monthly set up from last month. So if you told yourself, man, I really want to get into shares on this, it's around 370. You're about 30 points shy, but you're almost up to 100 points on the shares if you got in. But if I was in that for my account, for example, let me bring over Netflix. right? 100 shares definitely would have made sense in this account. But let's say I was even in, oh, that's not what I meant to do. Let's say I was even in something. Well, I know in my other accounts I don't know why it's not adjusting there. But this should say 4,000, right? So let's say I was in this for 4,000. I still wouldn't want to risk the 4,000. So I'd probably set a stop loss for maybe at $300 so that I'm protecting $3,000 left of this trade, right? So that's what I'd be looking at here on the shares if I had jumped into them to play them to the upside. So that's when I might personally consider a stop to put it on. And once again, right, you have the stop limit order right here that I could put it on for. Yeah, not a problem. So thanks, guys, for joining me. As always, have a great rest of your trading day. May the trade be with you.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me over.